Hey, Cal Ewing here, and today I want to talk a little bit about real estate crowdfunding platforms. So if you have not come across these yet, these are pretty cool. New technology, I guess, or new way of doing real estate deals over the past 15 years, where these platforms are out there where you can go on, choose projects that you want to invest in, and you can invest small amounts of money along with the rest of the crowd, why they call them crowdfunding. But individuals can all contribute to fund larger real estate investment projects. So these could be large-scale development projects, large multifamily buildings, and even down to single-family home renovations and fix and flip type projects. So it's really cool because you can go in, set up an account, load up your funds, and then choose the project that you want to invest in and how much money you want to invest into that project. So it's kind of a neat way to invest money that's been really unavailable to most people for a very long time. And so a lot of the large development projects out there, you have to be, an accredited investor or super wealthy in order to take part. And with crowdfunding, it's really neat is that you can invest smaller amounts of money and be part of a bigger development or a bigger project that otherwise you'd never have access to. So it's pretty cool. Some of the ways that you can get involved in these deals, you can either take an equity position. So you're actually sort of like a shareholder in the project, kind of like when you buy stocks, right? You can take an equity position in the overall project and contribute funds to fund the deal. In this case, your returns are based on how well the project does. Okay, so if the project does really well, your rate of return is going to be higher, whereas if the project flops, you may actually lose money, okay, depending on the number of ownership shares that you've got or equity position in the project. The other way that typically these platforms work is you could come in as a debt lender, and it's like a private loan. So you could lend, let's say you're lending 20 grand to a project, and there's a set return or yield or interest rate that's paid based on the amount of money that you've lended into the project. So in this case, you're more like a private lender and you're earning a set interest rate. Okay, so some of the other obvious benefits to doing this is if you don't have a lot of money, you're a small investor just getting started, you can get involved in larger projects that you wouldn't have access to. Maybe you don't have enough saved up for a down payment on your own investment property, or to buy it cash you don't have enough. But this way you can get into some really good deals across the country with smaller amounts. Another benefit is you can diversify. So say you've got some investment dollars that you're wanting to put in to real estate. It makes a lot of sense to spread the risk out over multiple projects or multiple properties. So you can put, 10 grand in one project, 10 in another, 10 in another. And now if one project fails or doesn't do as well, there's less risk because you're spread out over other projects that will hopefully do much better, right? Whereas if you have your money in a deal that flops, there's actually a chance you could lose your entire investment if it's a really bad deal. And then speaking of diversification, you can also diversify your investments across locations. So you can invest in projects across the country in different states or cities or markets. And again, that way you're spreading the risk out over any regional impacts that might happen to the local real estate economy. If you're spread out, across the country, then any small factors that maybe affect the real estate market won't drain all of your investment because you're invested across the country. Okay, so those are some of the positives and pros. The other thing is you get access to deals that you might not be able to find yourself, right? So you're leveraging these larger companies that have been able to put these deals together. They have a large track record, a lot of them, so they've got experience and track record and connections, access to better deals, and so they create these investments in these projects that you would probably not be able to put together yourself unless you had a lot of time, experience, and money and connections. Okay, and then another benefit would be the passive income that comes from this. So if you're looking for a passive investment that's going to put money in your wallet or your bank account every month, that's what these are typically set up as, where you're going to be paid an interest rate or return monthly. Okay, so a lot of pros. There's a few cons to these types of deals. Got them on my piece of paper here. Obviously, a potential for loss like any other real estate investment. So just because it's a crowdfunding platform doesn't mean you could potentially lose your money on it if the deal goes bad, the market goes south or something like that. So there's always that risk in every type of real estate deal. Another potential drawback is illiquidity. So most of these platforms, they want you in for, I was looking this morning, a lot of them, the minimum term length would be 3 to 5 years. Okay, so your money's locked in for that amount of time, and it's pretty hard to get your money out. So if you're needing cash bad at some point, or you find a better opportunity that's going to earn you even more return or higher return, it's harder to get your funds out if you're locked into one of these. So that's one downside, is you got to commit to 3 to 5 years at least into some of these projects. And another one is lack of control. So because it's crowdfunding, it means that you're a small contributor in the project. There's many other investors involved, plus the companies and investments and developers that are managing the project. So you have very little say, just like if you were to buy stocks, right? If you buy an Apple stock, you have no say in what Apple does or how well they do this, the decisions they make, etc. And so here again, you have very little control of the project. If things go bad, obviously you're going to have the platform that's going to hopefully look out for you as one of their investors. And I did see that some of these platforms actually keep a fund aside, so if someone does lose money, they can recoup your losses. So some platforms do offer that, but in general, you have a lot less control than if you were doing the deal yourself, or if you were working one-on-one as a funding partner with a real estate investing company or a single investor. Okay. And then I guess the biggest downside with these funding platforms would be the fees. So typically they're going to charge, the platform itself is going to charge a large fee to manage the investment. And so you're going to get a lower return, obviously, because you're, I guess, trading the convenience of having a platform like this, but you're going to pay fees and get a lower yield. So I was looking today, some of the investment opportunities that were on one of the platforms, they were paying, some of them were paying 5 and 6%, a couple others were paying 8%, something like that. So you're trading off the convenience with a lower return, but these are big projects with skilled companies that are running them, and so the chances of you getting that return are maybe higher. All right, so that's my 2 cents on real estate investment crowdfunding platforms. If you're looking for deals and ways to get involved, that might be something to look at. There's some in different countries. I know cross-border investing might be a no-no with these, but I noticed that there are these platforms for Americans, and there's also some in Canada. So if you're Canadian, you can get involved in Canadian projects. If you're American, you can get involved in American projects. So that's pretty cool. But yeah, if you're looking for ways to get in with lower money, or you want to diversify. If you want to diversify across multiple properties and multiple locations, crowdfunding platforms might be the way to go.